What if I told you that $1,000 could be the most important financial decision of your life? Not $100,000, not winning the lottery, not some secret inheritance. Just $1,000 invested correctly today. Most people think wealth starts when you have more money. But the truth, wealth starts when you understand leverage, compound interest, and asset growth. And by the end of this video, you'll see exactly how $1,000 can snowball into financial freedom or disappear forever, depending on the decision you make next. Stay with me, because what you're about to learn could literally change your financial trajectory. We're conditioned to believe $1,000 isn't enough. Investing is risky. I'll start when I earn more. Rich people have special advantages. But let's talk reality. Most millionaires didn't start with millions. They started with consistency, discipline, and compounding returns. The real difference between the wealthy and everyone else? They treat money like a tool for exponential growth, not temporary comfort. If you spend $1,000 today, you get temporary pleasure. If you invest $1,000 today, you create future leverage. That's the mindset shift. Let's break this down. If you invest $1,000 in index fund averaging 10% annual return similar, historical performance of this and baking into, here's what happens. In 10 years, about $2,593 in 20 years, about $6,727 in 30 years, about $17,449 in 40 years, about $45,259, that's without adding another dollar. Now, imagine adding $200 per month. That's how wealth is built. Compound interest is not just growth. It's growth on growth on growth. It's exponential wealth creation. The earlier you start, the less you need to invest. That's why $1,000 today is more powerful than $5,000 10 years from now. Time in the market beats timing the market. Now, let's talk about the hidden enemy, inflation. If inflation averages 3%, your $1,000 loses purchasing power every year. And if that money sits in a low yield, bank account earning 0.5%, you're losing money silently. This is why understanding asset allocation, passive income, and wealth preservation is critical. The biggest financial risk isn't investing. It's standing still. Now let's get practical. Here are 3 strategic paths that can change your life. Investing in broad market. ETFs tied to the S&P 500 gives you diversification across 500 of the largest U.S. companies. It's simple. It's proven. It's powerful. This is ideal for beginners, long-term investors, retirement-focused growth. What if you invested that $1,000 into a high-income skill, a certification, a digital business setup, AI, automation tools, e-commerce, infrastructure? One skill can increase your income permanently. Increasing your earning capacity is the ultimate asset, because income growth fuels investment growth. $1,000 can launch a niche content channel, a print-on-demand store, paid advertising to validate a product, freelance service marketing. This is where risk increases, but so does potential return. Entrepreneurship is financial acceleration, but only if approached strategically. Here's what most people don't understand. Investing creates confidence. Confidence creates action. Action creates momentum. Momentum creates wealth. The first $1,000 isn't just capital. It's identity transformation. You go from consumer to investor. That psychological shift is priceless. Imagine 2 people at age 25. Person A invests $1,000 today and $200 monthly into an index fund averaging 10%. Person B waits until 35 to start. By age 65, Person A could have over $1 million. Person B may have less than half. That 10-year delay costs hundreds of thousands of dollars. This is the opportunity cost of procrastination. Let's be clear. Investing isn't gambling. It requires emergency fund first 3 to 6 months expenses, no high interest debt. Diversification, long-term horizon. Smart investors think in decades, not days. Short-term volatility is noise. Long-term compounding is signal. Here's a simplified roadmap. Build emergency fund. Eliminate toxic debt. Invest first $1,000 into diversified assets. Automate monthly contributions. Increase income. Reinvest profits. Avoid lifestyle inflation. Repeat for 20+ years. Wealth is built through systems, not luck. If you're still watching, it means you care about financial freedom. Type invest in the comments if you're committed to growing your money. And subscribe for weekly breakdowns on passive income strategies, wealth building systems, financial independence tactics. Smart investing frameworks, because financial literacy is the ultimate advantage. Wealth equals income. Expenses times investment return times time you can increase. Income, investment, return, time in the market. Most people focus only on income. The wealthy focus on multiplication. Money is not earned to be spent. It is earned to be deployed. Let's project forward 10 years. You didn't invest. You didn't learn. You didn't build. And inflation kept rising. Your cost of living increased. Your stress increased. Your options decreased. The pain of discipline today is far less than the pain of regret tomorrow. The world rewards asset owners, business owners, investors, shareholders. When you invest, you own a piece of productivity. You own innovation. You own growth. And that ownership compounds. Here's the truth. $1,000 won't change your life overnight, but the decision behind it will. You can spend it, delay it, or deploy it, and that choice determines your financial future. If this video gave you clarity, share it with someone who needs to hear this. Because the difference between financial struggle and financial freedom often starts with a single decision. And that decision might be made today. $1,000 invested today isn't about money. It's about momentum. It's about ownership. It's about control. And when you understand that, everything changes. The $1,000 decision tree, where most people go wrong. Let's visualize something. You have $1,000 sitting in your account. At that exact moment, you are standing at a financial crossroads. Path 1, upgrade your phone. Take a trip. Buy things you don't need. Dopamine spike. Money gone. To zero. Path 2, deploy capital strategically. Create an asset. Increase earning power. Let compounding do its job. Future leverage activated. This is the difference between consumption mindset and ownership mindset. And here's the uncomfortable truth. Most people struggle because they earn enough. But because they consistently choose short-term gratification over long-term wealth. Understanding risk the right way. When people hear invest, they think, what if I lose it? But let's redefine risk. Real risk is not investing relying on one income stream, depending on a paycheck forever, letting inflation erode your savings. Having no assets working for you. Volatility is temporary. Permanent inaction is devastating. Look at long-term data from the S&P 500. Despite crashes, recessions, and global crises, the long-term trajectory trends upward. Markets fluctuate. Innovation continues. Productivity expands. Ownership wins over time. Here's something powerful. The first investment is not about money. It's about identity. When you invest your first $1,000, something shifts internally. You stop saying, I hope I'll be financially free someday, and start saying, I am building assets. Identity drives behavior. Behavior drives results. This is why small beginnings matter. Because success compounds psychologically before it compounds financially. Turning $1,000 into a system. Wealth isn't built from one lucky move. It's built from systems, Let me show you a simple scalable framework. Step 1. Invest $1,000 into a diversified ETF. Step 2. Automate $150, $300 monthly. Step 3. Increase income every year. Step 4. Increase contributions as income grows. Step 5. Reinvest dividends. Now imagine doing this for 25 years. You're not chasing hype. You're building infrastructure. And infrastructure creates financial stability. Let's talk modern wealth. We live in the era of AI tools, digital products, content monetization, e-commerce, remote services, online education. $1,000 today can build digital assets that produce recurring income, a website, a course, an automated service funnel, a faceless content channel. Digital assets scale without linear effort. This is the new leverage economy. One smart, digital investment can produce cash flow for years. Let's walk through a realistic scenario. You invest $1,000 today, $250 per month, average 9 to 10% annual return after 10 years. 6 figures possible. After 20 years, multiple 6 figures. After 30 years, potential 7-figure portfolio, not because of genius, because of discipline. This is financial momentum. And momentum becomes unstoppable after year 10. Most people quit before the exponential curve begins. Pause for a second. If you had $1,000 right now, how would you deploy it? Drop your strategy in the comments. Are you going 1. Index funds to skill investment, 3. Business launch, 4. Split strategy. Engagement creates accountability, and accountability builds action. Here's what smart investors often do. They divide the $1,000 strategically. Example, $500 into an ETF, $300 into skill development, $200 into launching a micro side project. Now, you're balancing stability, income growth, upside potential. That's portfolio thinking. You're diversifying not just assets, but opportunity streams. The reason $1,000 changes everything isn't the amount. It's what happens when you understand compound growth, asset allocation, risk management, cash flow strategy, tax, efficiency, long-term capital gains. Financial education creates asymmetrical advantage, and asymmetry is how wealth accelerates. Here's a trap. You increase income, then increase expenses. New car, bigger rent, luxury subscriptions. Your income rises, but your net worth doesn't. Wealth isn't about income level. It's about the gap between income and lifestyle. Invest first, upgrade later. Assets before aesthetics. When you own assets, they generate returns. Returns generate reinvestment capital. Reinvestment creates exponential growth. Ownership creates optionality. Optionality creates freedom. Freedom creates control. Control creates peace. That's the real end goal. Let's compare. Person A invests $1,000 at 22. Person B invests $5,000 at 35. Even though Person B invested more, Person A could still end up ahead because of time. Time is the ultimate multiplier. You cannot buy back time in the market, but you can start today. Automation equals financial discipline. Want to know the secret weapon of investors? Automation. Set it up once. Remove emotion. Invest consistently. Emotion destroys portfolios. Systems build them. Automatic investing turns discipline into default behavior. Let's simplify everything. Wealth equals consistency times time times compound growth times emotional control. Notice what's not on that list. Luck. Perfect timing. Inside secrets. Just structure. Here's a challenge. For next contest years. Investkastri, moi badass, ignori noisy. If you do this, you're in look unrecognizable. Because most people won't stay consistent for even 24 months. Consistency is rare. And rarity creates advantage. Why most people never see exponential growth? Here's the brutal truth about wealth building. The first 5 years feel slow. The next 5 years feel steady. The next 10 years feel explosive. That's how exponential growth works. It's boring. Until it's life-changing. Most people quit during the boring phase. They check their portfolio after 6 months and say, "That's it." They don't understand that compound interest is invisible before it's unstoppable. This is why long-term investing, passive income, and financial independence require emotional discipline. The wealthy don't just invest money, they invest patience. Let's address the fear. What about market crashes? Here's what smart investors understand. Market crashes are discounts when markets drop 20%, 30%, even 40%. Assets are on sale. Historically, after major downturns, markets have recovered and continued upward over time, including the long-term resilience shown in the S&P 500. The keyword here is long-term horizon. Short-term traders panic. Long-term investors accumulate. Wealth transfer happens during volatility, and if you're prepared with capital and discipline, you position yourself on the right side of that transfer. Let's simplify becoming a millionaire. You don't need a viral startup, a lottery win, a 6-figure salary. Immediately you need consistent investing, increasing income over time, compounding returns. 20, 30 years of discipline. Example. Invest $500 per month at 10% annual return for 30 years. That alone can cross 7 figures. That's not hype. That's math. The real question is, will you stay consistent long enough? Imagine your future self 20 years from now. You check your investment account. There's financial security. There's freedom. There's optionality. And it all traces back to one moment when you decided to take $1,000 seriously. This is not about becoming rich overnight. This is about becoming unstoppable over time. Here's something advanced investors understand. The fastest way to grow your portfolio isn't chasing high returns. It's increasing contribution rate. If you increase your income 10% per year, keep lifestyle, inflation under control, invest the difference, you accelerate wealth dramatically. Focus on high-income skills, career, leverage, negotiation, entrepreneurship, scalable digital income growth fuels investment growth. That's the multiplier strategy. Let's talk diversification and asset allocation. Your $1,000 could go into index funds, dividend ETFs, REITs, real estate investment trusts, individual growth stocks, small business equity, digital asset infrastructure. Each has a different risk-reward profile. Smart investors don't chase hype. They balance growth, income, stability, liquidity. That's portfolio construction. Dividends are powerful because they pay you to own assets. When you reinvest dividends, you accelerate compounding. You're building recurring income, cash flow, financial resilience. Dividend reinvestment is one of the most underrated wealth-building strategies. You're not just waiting for appreciation. You're stacking ownership. Let's make this real. If you delay investing for 5 years, you don't just lose 5 years. You lose exponential growth from those 5 years. That difference can equal hundreds of thousands of dollars over a lifetime. Procrastination has a price, and that price compounds. Level 1. Stability emergency fund plus diversified investments. Level 2. Growth increase. Income plus invest aggressively. Level 3. Freedom assets generating enough passive income to cover expenses. Your $1,000 is level 1 activation. Without level 1, level 3 never happens. If you've made it this far, you're not average. Comment compound if you understand that time is your greatest financial weapon. And if you're serious about financial literacy, wealth building, investing for beginners, and passive income strategies, hit subscribe. Because most people scroll, few people execute. Money is emotional. Fear causes selling low. Greed causes buying high. Impatience causes quitting early. But discipline creates wealth. The most powerful financial skill isn't stock picking, it's emotional control. Master that, and your portfolio reflects it. Repeat this: I am an asset builder, not a spender, not a consumer, not a victim of the economy, an owner. When you see yourself as an investor, you think long-term, you act strategically, you prioritize growth. Identity precedes income. Here's something no one talks about. Your first investment builds belief. Belief builds consistency. Consistency builds results. Results build conviction. Conviction builds wealth. It's a psychological compounding effect. And once you cross that mental barrier, you stop hesitating. You start executing. Let's get tactical. In the next 90 days, allocate your first $1,000, automate monthly investing, track net worth. Eliminate one unnecessary expense increase. Income through one new skill, that's momentum. Wealth isn't built in a year, but direction is set in a day. $1,000 invested today is not about the amount. It's about ownership, compounding, leverage, discipline, identity. The world rewards those who allocate capital wisely. And the earlier you begin, the more dramatic the outcome. So here's the final question. Will you look back 20 years from now, grateful you started or wishing you had? The decision costs $1,000, but the reward could be financial freedom. Act accordingly, and I'll see you at the top. Stop scrolling for a second. Open your banking app in your mind. Imagine seeing an extra $1,000 sitting there. Now ask yourself, will this money become a liability? Or will it become a life-changing asset? Because here's what high net worth individuals understand. Money is either working for you or you're working for money. There is no neutral. And in today's economy, with rising inflation, volatile markets, high disruption and increasing living costs, financial literacy isn't optional. It's survival. Keywords you need to remember: financial freedom, passive income, investing for beginners, stock market investing, wealth building strategies, multiple income streams, long-term investing, early retirement, compound interest. These aren't buzzwords. They heap blueprints. Let's simplify the game. Financial freedom equals assets. Liabilities plus cash flow times time. If your assets grow faster than your expenses, you win. If your investments generate recurring income, you gain control. And control is the ultimate luxury. $1,000 is the starting domino. Because once you build momentum, the strategy scales. $1,000 becomes $10,000. $10,000 becomes $100,000. $100,000 becomes generational wealth. But it never starts at $100,000. It starts with the first disciplined move. Wealth isn't built in headlines. It's built in habits, automatic investing, portfolio diversification, reinvested dividends, expense control, income growth. That's it. No secret crypto coin. No overnight trading strategy. No get rich quick. Just intelligent capital allocation over time. And here's the crazy part. Once your investments begin generating returns that exceed your monthly expenses, you unlock financial independence. That's when work becomes optional. That's when stress decreases. That's when choices expand. All because you respected $1,000 enough to deploy it wisely. Imagine yourself 15 to 20 years from now. You're calmer. You're secure. You're not panicking about bills. You're not trapped in a job you hate. You have options. And someone asks you, when did everything change? You don't say, when I got lucky. You say, when I started investing consistently even when it felt small. That's the moment. That SE this moment. If this video shifted your perspective on money, do 3 things right now. Comment I'm investing, make it real. Share this with someone who needs a financial wake-up call. Subscribe for deep dives on wealth creation, passive income strategies, smart investing, and financial independence. Because the algorithm rewards engagement, but your future rewards execution. $1,000 is not small, it's a seed. And seeds don't look powerful until they grow. The question is not whether $1,000 can change your life.